Good morning. Welcome to the B.F. Anderson Technical Report for November the 10th. In life and business, there are two cardinal sins. The first is to act precipitously without thought, and the second is not act at all. So this is Carl Icahn, who I think has got some wise words for us this morning. Also, if you make a mistake and you do not correct it, this is called a mistake. Confucius. More wise words, but this is where I'm at on this. I wanted to kind of use this as an intro. It looks like the Bitcoin, whatever you want to call it, is kind of unraveling here. It really is amazing how many young people I run across that are interested in Bitcoin. I get asked about it all the time. And I think Warren Buffett said it the best. He said, if you offered me all the farmland in America for $1 trillion, I'd write you a check. He said, if you offered me all the apartment buildings in America for $1 trillion, I'd write you a check. But if you offered me all the Bitcoin in the world for $50, I wouldn't do it. I wouldn't write you a check. So Buffett was right. This doesn't make sense. I've never understood it. However, it does appear to be unraveling. One of the exchanges called FTX looks like they're going to have to go into liquidation. Now, this is that report I keep referring to by J.P. Morgan, and it talks about volatility. And basically, the thing we have to realize that we are hopefully in a bottoming process here that will result in a new bull market coming out of this bottoming process. But the problem with bottoming processes is that they're volatile. And think about it. The market's down for a reason. There's a lot of uncertainty. So, because of all the uncertainty, you have a lot of volatility. So what this report basically says, it says, how over the long run, returns and volatilities tend to track each other pretty closely. If the volatility of your stock is rising sharply, chances are that its returns are falling. So if you look at the graph over here, he does a deviation study where the higher the deviation or the higher the volatility, the lower the returns. So volatility is important, and I've always added tools to my tool chest, and one of them I've been really looking hard at is the volatility index called the VIX. Now this measures the volatility on the S&P 500, and the way to look at it is that if volatility is climbing, which that's what this represents of the VIX, probably the market is having a tough time. So the rule is the average volatility since the life of the VIX has been about 21, a reading of 21. Now, I have seen the VIX go as high as into the 80s back in the '08 financial crisis. Now, we as far as this particular cycle, we got up to around 35. So the basic rule is you want to see stabilization, you want to see a downtrend in volatility, which we're seeing, and you want to be below 31 because above 31 is considered bear market. So if we can see the VIX settle down, we get this volatility down and things become more certain, I think it's going to be much positive, a big positive for the market. Now, this morning we got the CPI out, so the futures are up really big. I'm seeing up 800 points this morning. So it looks like a big rally's coming, but here's the NASDAQ. Now remember the rule, we have a lower moving average here, which is the 25-day moving average, and the rule is if we're below that lower moving average, and that moving average is turning down, that's a sell signal. That's not a buy signal. However, we look at 5 indexes. Here's the mid caps. Now they're on a buy signal. So it's all really the problem the market is having in a big way is the NASDAQ. And we're going to look at some of the stocks in the NASDAQ to kind of see the point. Now here's the New York Stock Exchange. All the stocks on the New York Stock Exchange, it's on a buy signal. The rule is we want 3 out of 5 of these indexes to be on buy signals. Small caps actually performing quite well, above the lower moving average. Lower moving average is actually giving a golden cross here. So we're seeing an improvement, and the S&P actually is holding that lower moving average, but barely. So let's just say we've got 3 out of 5. 3 out of 5 would tell me that maybe the market is trying to put in a low here, and at the same time with volatility coming down, that's somewhat of a positive. Now here's the big negative. This is a ratio of the NASDAQ compared to toothpaste stocks, consumer staples, toilet paper, things you have to have. Now you can see here that this particular line is just really in a downtrend. So this is the fly in the ointment. The NASDAQ is primarily the big problem out there. It's these growth stocks. We'll look at them. Treasury bonds, okay, here's our 3 economic indicators. The 10-year Treasury kind of holding around 4.1. However, this morning I'm hearing that interest rates are dropping quite dramatically because the CPI came in better than expected. The Consumer Price Index, inflation looks like it may be coming down a little bit here for the month of October. Oil continues just to basically move sideways. Financial stocks are actually showing some improvement here. Would be nice to see that get back above the 200-day moving average. New lows, we're still seeing too many new lows. We'd like to see under 40 a day. This blue line here, that's at 40 a day. This is the New York Stock Exchange. We've been getting a lot of new lows. We want to see an extended period of time where they're below 40. Now, here's some of the stocks that are really kind of troubling me a little bit. This is Apple. This is a long-term trend line that I've drawn all the way back to 2019, and you can see Apple has broken below that level. Now, if you look at a shorter-term snapshot here, it seemed to me that the support area for Apple was around 137.5, and it's broken below that. It's down to 135 roughly. Now, it's probably going to be up this morning. But my point is that when you start seeing these big stocks that have been popular for the last couple of years breaking down, it's not a good sign, because it could, these mutual funds are all loaded up in these things, and it's going to pull the mutual funds down. Now here's Amazon, another example. Amazon breaking down, you can clearly see. And then look at all the selling volume. You're really getting a lot of selling volume here in Amazon. Here's Tesla. Tesla broke to a new low yesterday. They're having, all kinds of issues with things, but you can also see the heavy volume coming in. So I think you see the point. There's a lot of stocks that just aren't behaving themselves, mainly in the NASDAQ. Here's the bond market. This is the junk bond fund. Now, the way we're looking at that is it's pretty much moving sideways right now. We could get a rally today if, the interest rates do fall. Now let's take a look at the top 5. These are the ones that are coming to the top of our list. Not necessarily buys now. These are just stocks we're watching. This is Impinj, which is a telecommunication equipment company, gapped up on earnings, kind of rolling over, pretty much violating that gap. So I would just continue to watch Impinj. First Solar, again, these solar stocks continue to stay fairly strong. As you can see here with First Solar, we're holding that 10-day moving average. Stock is, basically, we got a gap up here on the stock. I want to say earnings. A little bit of a softness, but it's definitely holding that gap. So that's another one to keep an eye on. Enphase, here's another one. This one is a solar company that makes the inverters for the solar panels. It gapped up and it's kind of rolled over. Again, it broke below the bottom of that gap, so that's not a good sign, but let's continue to watch. Here is Axon Enterprises. They announced earnings the other day. Big gap up, 1.6 million shares. Stock normally trades about 480,000 shares a day. So, 3 times their volume. Broke out on earnings. This company they were the inventor of the taser, but they're also involved in helping police with cameras and so forth. It's an interesting company. Here's another company. Now, we do own this stock. We took a position in it. This is called Insulet, and it's a diabetes treatment. It's where you actually can see people that wear these pods on their arms that will automatically inject insulin at the right time and the right amount. It's, diabetes is really a big problem, a health problem for our country, especially with the millennial population. There's quite a few diabetics in that group. So we're also seeing another diabetic company called Dexcom that looks positive as well. Now, so far it's holding that gap up, so I would continue to pay attention to this one. So basically, in conclusion, what I'm saying is keep an eye on volatility. It looks like it's starting to settle down a little bit, and hopefully we're getting ready to see some improvements in inflation, which could cause us to have a nice rally. Thank you very much. If you have any questions, please let me know.